right, good morning, everybody. Let me make sure my streams are live. I've got one. Yes. Good. All right, great. We're both live. You guys don't forget live commenting throughout the broadcast. You guys live comment, I'll talk with you. Now, you guys, look, here's the thing. You came here to hear some truth about economics and stock market stuff, and that's what I'm going to do my best to deliver to you. So let's get right to it. First things first, let me adjust my audio because last time audio was not as strong as it could have been. And you guys in the comments were really helping me last time also, so if the audio isn't loud enough, just let me know. So I thought I'd start this off with just a little light note this morning. I came across this, it was actually a meme, but hey, it's still good news worth celebrating even though it's, 6 years old news. Vietnam is sentencing corrupt bankers to death by firing squad. I think that sounds like a reasonable solution to things like 2008 and all of that. I mean, I don't know. It seems like it would help a little bit. I guess we'll have to wait and see how the scientific studies and experiments play out. But anyway, okay, let's see here. It's 8 a.m. Before we get into a couple tweets I want to show you all, let's just see what's happening on CNBC this morning.
But why is my wife checking seven times a day for something happening when nothing's happening? I mean, it's like nothing. There's like, wow, nobody.
Okay, so just like me, they're trying to kill time. However, I've got quite a lot of things I want to go over with you guys. I've got 4 stocks I want to go over. Like I said on the last episode and the one before that, this is earnings season. Every 3 months, we have about 4 weeks or 3 weeks of very heavy earnings reports and a lot of very unique things to pull out of that. Before I get to that, though, like I said, I've got Visa. You guys, Visa is involved in some this is a really disgusting story, honestly. It involves Visa knowingly supporting child porn. Then we've got an interview with the Exxon CEO, the Pfizer CEO, and the Royal Caribbean CEO. Those are a few stocks I want to go over with you guys. But before that, my God, did you guys see this stupid Inflation Reduction Act? Now, you guys, first things first, you have to know about legislation in the United States is whatever the name of the legislation is, you're going to get the opposite. That's just what you have to know. You're going to get the opposite. So the Inflation Reduction Act, you need to know we're going to get a lot more inflation. In fact, about 3 or 4 months ago, I was laughing with some friends and clients because New Zealand, the Prime Minister of New Zealand, announced that they were printing a billion, whatever what's the currency in New Zealand? Whatever they're using, it's not U.S. dollar, but they were printing 1 billion of them to try to combat inflation. And we were laughing because that's not how this works. That's not how any of this works. But here we are. It doesn't matter. Now we're trying it in the United States, and I have a feeling that we will have the same failures, if you will. Let me quickly edit this little guy here. Thank you for being patient with me. Okay. REDUCTION. You guys, this is such like an amateur show. I appreciate y'all being so patient as I do this kind of stuff. All right, I had to make a quick edit there. So here's the deal. Inflation Reduction Act. Biden is and the Democrats are putting this through. Republicans, I don't think, are supporting it, although I'm sure Roy Blunt and those guys will. So first off, Biden promises no tax hikes if you make less than $400,000 per year. That was one of his campaign promises. The Inflation Reduction Act raises taxes for everyone making over $30,000 a year. You guys, everybody who said, you were warned. Don't say you weren't warned. Let me put it that way. Yeah, it's right here. So this is the proposed, all right? This is the proposed tax increase that has come out. And now there could be more adjustments. It could be different when it finally gets put in stone and voted on. But literally everybody making above $30,000 a year is increased. Now you can see it increases from like 7.3 to 7.6 for the lower people, and down here at the top, it's the highest earners 30.2 to 30.8. Now you might say, well, that's just a tiny amount. No big deal. It's still a tax increase, and in a time when everybody is kind of aching already from a not totally healthy economy that already has a lot of Inflation that already has a bear market in the stock market, that has the hints of a recession, that has the not very strong employment market. This is not just, it's just not wise. Now, here's the thing. This isn't it. All right, this isn't it. There's so much more. There's another tweet I want to go over this. Funny enough, this is what I just said, actually. As the great Ron Paul said so well, look at the name of the government act and the outcome will be the exact opposite. Never has this been more true. That Inflation Reduction Act, it's a $430 billion spending package. That's it. And one of the big controversial things in this is that what a massive, massive amount of hundreds of billions of dollars that used to be mandatory, must be spent on this, will now be shifted to discretionary, so it can be spent on anything. Now, you guys, this is that stage in a collapse where people are grabbing anything that's not bolted down. You know, usually the fraud and the fraudulence was kind of classy. It was done with highbrow status, behind closed doors, very fancy, so that nobody knew. Now they're just grabbing the silverware off the table, they're grabbing candlesticks and running out the door. Okay, now this is the other part. Okay, Glenn Greenwald actually put this. He says, it shouldn't, I know it shouldn't, again, I know it shouldn't, but sometimes it does surprise me how brazen, undisguised, and virtually explicit NBC News reporters are about serving White House messengers. This is indistinguishable from a DNC press release and just as one-sided. So this was an NBC reporter who tweeted this out. If this bill passes, Biden will have inked wins on drug prices, climate, and Affordable Care Act. Higher taxes on corporations, 1.9 trillion COVID rescue plan. COVID, you guys, that ended like 3 years ago. The 1.2 trillion infrastructure law, new gun law, chips in China bill, KBG, blah blah blah, lower court judges, postal reform. It's kind of frustrating. It's kind of frustrating just to see that we have so many people who are legitimately not making ends meet. I noticed this during COVID, and you may have noticed this as well. It was back during, right during lockdowns when everybody couldn't go to work and couldn't earn money, that the food lines at churches went from a few cars over the weekend to wrapping around the block. And I don't know about you guys, but I've noticed all of the churches in town again are starting to have really long lines of people driving through looking for, some extra food out of the pantry. Now, I get it. Probably some of those people could go work and whatnot, but generally speaking, this isn't going to end well. You add this in this bill right here on top of the how much money have we sent to Ukraine already? It's like 500 billion at this point, something like that. It's just very, very up in your face that where's this money going to go? Is it going to help all the homeless people, all of the tent cities that you see all around town? Probably not. Is it going to bring jobs back from overseas so we can have a strong manufacturing industry, good blue-collar union jobs? No, probably not. Is it going to go help the schools and help the teachers who are strapped for cash? No, probably not. So, it's very frustrating to see that. But the reason I bring that one up is, don't worry, inflation, it's an Inflation Reduction Act. So don't worry, okay? Don't worry. Let's just see real quick.
And you mentioned Pelosi's trip, which, although not specific, is expected to include a visit to Taiwan, which China has said would raise their hackles.
Right, and I do think that there's this is somewhat related, I think, to Ukraine.
These interviews then. Real quick, let's see. How's crypto doing? Crypto, over kind of sideways, honestly, kind of flat sideways, a little bit to the little bit up. Let's see overnight, how did all the stock markets around the world do? Pretty flat. Asia a little bit up, Europe a little bit down. All right, so we ought to have expect kind of a flat day today. Okay. All right, couple things before I get to these interviews. If you guys didn't see this came out, I think it was Friday. Argentina is collapsing again. People are refusing to work as the government runs out of money and cuts subsidy programs for food and fuel. 43% unemployment, inflation over 60%. Still not as bad as Turkey. Turkey is, I think, in the 70s or 80s at this point. It says here, quote, half our country doesn't want a job, and the other ones that do don't want to pay the taxes for the others. Gosh, where have I heard that before? That sounds a lot like America. Next one. This is another big one, although it's like not really big at all. Financial Times. Evergrande misses deadline for $300 billion debt restructuring plan. For those of you who aren't aware, in fact, hang on a second. I think I have a little clip I wanted to show you for this one. Where was the Evergrande? Oh man, did I miss it? Shoot, you guys. Oh, I apologize. I had a little video about how important this was. So here's the deal. Essentially, Evergrande is China's biggest real estate development company. For almost a year now, they have been on the verge of bankruptcy. In fact, really they have been. They've been insolvent. Essentially, what people are thinking is that the Chinese government is keeping them afloat. However, they've got something like, God, it was the video clip I had ready. It was like $8 trillion worth of real estate is on the line here, and it's something like just Evergrande is something like God, it was like 25-35% of Chinese real estate market, but then globally it's something like 7% of the global real estate market, which is still massive when you kind of think about it. But all that's going on here is just keep that in the back of your head. They have been missing again. They're the China's biggest real estate developer. These are the people that are building these apartment buildings like this one in the picture that have no people in it. You've seen. Anyway, they've missed another deadline to pay people who own their debt. Not a good sign. Okay, let's check out CNBC one more time. How much time do I have left? 8 minutes. Okay, let me go right to these interviews, you guys. First off, Visa. This is disgusting. Let's see here. Michael Bowe, the lead attorney for plaintiff Serena Feliz, talks to Andrew Sorkin about Visa's liability in Pornhub child sex trafficking lawsuit in a federal judge's decision on Friday, maintaining Visa as a defendant in the case. You guys, this is a sick, sick thing. Here's the 30-second rundown. A couple years ago, some 13-year-olds filmed each other having sex. The guy posted it online. The girl freaks out, obviously, because she didn't know, and it was totally inappropriate and wrong that he did that. Well, Visa and MasterCard are Pornhub's primary commerce, whatever I'm trying to think, payment processors. New York Times writes an article about this young girl. Visa catches wind of it, cancels all contracts with Pornhub. Pornhub and all their other sister porn websites take off up to 10 million illegal videos, just like this underage one. Well, then what happens is a couple weeks later, they put all those illegal videos back on in China. Visa lets them back on the platform. So there's a big lawsuit underway. Nobody's talking about this, but I want you to know about this. So check out this interview.
Michael, what do you think the liability should be? And there's been discussions about this online over the weekend, given the laws around child pornography in America, for folks who are on the board of Visa, for example, for the CEO of Visa, Al Kelly?
Yeah, look, I think this is. Look, it's criminal liability. It is. We can't prosecute people, but the way the statute works is for us to proceed, we have to allege a violation of the Child Sex Trafficking Act. The judge found we did, and the judge found we alleged that Visa was a co-conspirator in that criminal conduct. What should the liability of the CEO and the board be? Well, let me give you these facts. This is not a situation where some lower level executives made a bad decision about this. That was the case sometime a long time ago.
Also, what he's talking about, it's known that Bill Ackman, an activist billionaire investor, personally called the CEO of Visa. So the CEO of Visa knows the situation.
Right.
But the evidence here is that they were doing business with MindGeek for over a decade. They had done the due diligence on this. It was known within Visa. It was the subject of conversations with MindGeek. Then, over the course of several years, because this was so ubiquitous, there were one high-profile case after another, including a horrible case of a 15-year-old who was kidnapped in Florida and had 50, and she was an approved model, and 58 videos of her were up there.
Michael, if you go ahead.
But then for a year, There was a campaign on Twitter that outed all this. Advocates and victims went to them. We went to them. Nick Kristof wrote his piece. We filed a lawsuit with all the evidence, and then they still did business. At that point, it is absolutely at the board and CEO level. And then yesterday, their statement that they disagree with these allegations are true. We didn't make them up. We investigated.
Michael, we're up against a hard break in just a moment, so I have to ask you, Al Kelly, do you believe that he should be held criminally liable for what Visa has done here, and recognizing that their defense is they should not be in the business of policing what their merchants do?
When they know that their merchants are engaged in crime, and they knew this was at the CEO and board level for at least 2 years, and they continued to do that business. So yes.
Yeah, that is nasty. That is bad. At the CEO and board level, they knew about this kind of child porn stuff happening, and they still did it. And then this guy has the nerve to ask, is it really their fault? Should they get in the way? Are you kidding me? This isn't like a fireworks stand or, some Republican selling bumper stickers. This is actual child porn. What a stupid question. All right, you guys, let's see here. Let's check this out. How much time? We got 4 minutes and 15 seconds. Let me show you the interview. Okay. So that is that's the Visa thing. How's that going to affect Visa? Let's just have a quick look at their stock price right now. Let's see if anything is happening on Visa's thing. Yeah, so they're down quite a lot right now, but it could just be that the futures are also down a bit. Who knows? All right, so speaking of, look here, crude oil is currently down 4.5% pre-market. Speaking of oil, last week's earnings were great for Chevron and Exxon. Here is a little clip, though, from Exxon's CEO. Let's hear about how successful transitioning to renewable energies is.
Reading some comments that you had made at a conference, and I think it was something along the line of you think that oil prices are going to remain high for at least the next 5 years based on the amount of exploration and spending that's gone into this over the last several years, that we've been underinvested. For anybody who's looking for a drop in prices, what would you tell them? And just in terms of high oil prices, you're looking at $100 and north, you think, over the next 5 years?
Well, and that conversation was really talking about supply and demand in a commodity market that ultimately is what's going to set the price. And my comments were, if you look at what it takes to bring on new investments to grow supply in the...
Now stop right there. He says that's the most important thing, what it takes to bring on new investment. You guys, if you want to go open a hairdresser salon or an accounting firm, or if you want to sell bumper stickers, or if you want to be, an Uber driver, generally speaking, it takes like a week or two of you just maybe getting a couple papers in place, and then like, boom, you're a business owner, right? In order to drill and produce and move oil and gas around, that takes millions of dollars up front, and it takes a ton of inspectors and regulators and permits and inspection, all that stuff. The amount of time and energy and money that has to be in place before you can even drill a little bit is massive. Then you actually start drilling. That can take weeks, months, just to find and make sure that your spot is like a healthy, good spot to drill. There is so much upfront work that goes into drilling that for oil and moving energy around. People don't think about that. Put yourself in the place of a oil and gas industry expert or business owner right now, with how hostile Western countries are being towards oil and gas. Would you put your name and your reputation and your money on the line right now? That's exactly what this guy is saying right now, and the answer is no. They don't want
the
to.
oil industry. It is a fairly long cycle investment, and so 3 to 5 years is a reasonable time frame to think about bringing significant additional production into the mix that's not already in the plans or in the process of being built. So that was that context. Obviously, where demand goes, and then that balance between demand and supply is going to impact ultimately the prices, and demand's, I think, a much more difficult thing to project. But we can clearly see from a supply standpoint, we know what it takes to bring on these large projects, and that does take time, and it's difficult to take shortcuts and reduce that.
There's all this talk about a potential recession headed our way. Have you seen any drop in demand anywhere in the world in terms of demand for petroleum products?
Well, as we got into the early part of this year in the first quarter, and as typically a period where refineries are and have come back on, those prices have dropped. High prices, there is some elasticity in demand, so we did see some impact and moderation in demand, but continue to believe and see growth overall in products as economies continue to recover. I mean, logistics and some supply constraints continue to be a challenge, I think, for all of industry, but my expectations will continue to see some modest growth. And even without that growth, the market still remains tight given the supply challenges that we just spoke about.
So that is, honestly, that's not the most cheery
How much of the
review. So if you listen to him, he says he expects oil prices to stay high for at least another up to 5 years. He says that this logistics and supply of moving energy around the world is still very, very difficult. Then he says the amount of capital intense upfront work that makes oil and energy work is not very attractive right now for owners. So, time will tell. Now, here's another fun little twist since we're talking about energy. If you didn't see this tweet, our wonderful Treasury Secretary, the most successful Janet Yellen, who spoke a couple days ago, she says, price caps on Russian oil among the most powerful tools. So now they're openly talking about and getting people hyped up about the idea that a price cap might actually be introduced on Russian oil as a way to penalize Russia. And as Zero Hedge here comments, it's the most powerful tool to send gas to double digits. Without a doubt, you're going to see gas spike, especially over in Europe. But if they put, it was funny. I gave a 401k overview to one of our 401k clients. Oh, never mind. Shut up, because Marcus.
The earnings cuts, which then proceed. What you're just people just think you're de-risking. There's been a lot that's de-risked, meaning that the stocks are ready for some disappointment. Obviously, if it's right in your face, like oil today, it doesn't matter. But Chevron had such a good number. You have to expect Chevron showing you that, look, you may think that oil is lower and it matters, but what will happen is that the numbers are going to be incredible. So will the numbers be considered the last good number is how I think they're interpreting refinery.
Yeah.
And that's very positive for inflation, very negative for a lot of the oil and gas. I still think oil and gas in America is just extraordinary. And I don't think that very good article in Bloomberg this weekend about how, forget it, that OPEC can't flood the world like you think they can. But this is very daunting, these declines in oil there. Very daunting.
Gosh, for a moment there, we cracked below 93.
No, I've been saying for my Travel Trust, we're long a lot of oil. We're long about 9% oil because we just think that there's just not enough in the world. And that if China, this is, I think, reflective of China, reflective of PMI, reflective of a bunch of numbers.
Yes, we
Germany retail.
German retail sales worst on record.
Spain factory.
Yep.
So people just feel like, look, oil's really slowing down. But I think it's the demand side that's not as important as the supply side.
Right.
I want to see the supply side flood the world, and that is not happening.
So you don't have big aspirations for OPEC Plus this week, for example?
No, I don't think there's enough oil. I think this is very knee-jerk off data. And I do think that there'll be people who want, once again, sell oil, and they should remember that the SPR dump stops in October, and they should understand that we're still not pumping in this country at the level. I know that Brian D is going to say, well, listen, we're pumping furiously. But you talk to the companies, Chevron gave them what they wanted.
Well, I mean, Exxon's...
Yeah, so that is a kind of a shocking twist from last week when Chevron and Exxon both had great numbers. Now let's see what Fox Business is talking about here. Okay, Fox Business has some audio problem. Okay, well in that case, big deal. I'll get back to what I wanted to show you guys now. All right, let's check out this Pfizer CEO interview. This was from a few days ago as well. Now this is the thing about Pfizer, you guys. Pfizer, which is the most stand-up, reputable company in all of American history, they shake hands, they kiss babies, they donate to the homeless shelters, and their CEO, oh, by the way, this sponsored by Pfizer. Okay, CEO of Pfizer says the company gets almost 400,000 prescriptions per week for anti-COVID pill Paxlovid. So the reason I'm showing this to you is just think, for those out there who are interested in owning Pfizer stock, what happens when COVID finally goes away? You know what I mean. Technically, it's been over for 3 years, but you know what I mean with a wink and a nod. What happens when Pfizer no longer gets to milk the U.S. government for free money for all these Pfizer pills and vaccines? Because keep in mind, it's this the government. The government keeps paying for all of these, which, you know, obviously it's you and me, the taxpayer. But Pfizer isn't having to compete for this. They're just literally getting money thrown at them. So let's hear what the CEO has to say about this.
I feel a tinge of pride when President Biden took Paxlovid and went right back to work.
And then caught COVID again. Whoops, don't mention that part.
Frankly, I felt relief.
And then he caught COVID again, and then what did you feel?
Because the president is an important figure, and of course he is at the situation with his age is higher than in the high 70s, so it was important to feel that he's well protected. I'm very happy that right now we are having almost 400,000 prescriptions per week in the US alone of Paxlovid. I'm very happy that one of them was the president, and it went very well as with the other.
Don't miss a second of Mad Money. Follow @Jim.com or.
Okay, so to all my Pfizer folks, I apologize because I messed that up. Where was the other clip? Well, you guys, that's what happens when you watch, and this isn't stinking CNBC here. I'm trying to put together some interesting stuff for you. Okay, final CEO interview. This is Royal Caribbean. This one I wanted to play for you because a lot of clients ask me about various hospitality and vacation companies, and they're trying to time like, oh man, this has to be a good time to buy cruise stocks or hotels or what have you. Check this out with the Royal Caribbean CEO. I like this one.
Kelly, thank you. Jason, welcome back to CNBC. Let's start with the good news here. Revenue in the second quarter doubled what you saw in the first quarter. Pricing of tickets has certainly come down. Is that what's driving bookings here, Jason?
Well, no. What's really, if you look at our revenue environment, there's a mix between what's happening with ticket and what's happening with on board, and that's really more packaging in terms of how we're coming to market. What really drove it was higher load factor, so more accelerated demand on our close-in bookings is what drove the outperformance relative to our expectation for the quarter.
Your stock really popped on the comments you made on the analyst call this morning where you said you will prioritize cash to pay down debt. For those shareholders who are invested in RCL shares, are you telling them you will not launch a stock sale, which your competitor Carnival did last week?
Yeah, well, I really said, I think, three things about how we're going to manage our capital. First is we're still continue to seek high returning investments that we make. Second, as we are now generating free cash flow and so forth, we will be prioritizing that and using some of that cash to pay down debt. So I don't think what we're trying to signal is any type of capital raise we do as a board decision. We take raising equity it's a very, very high bar for us, and we don't have any plans to issue equity. And if you look in the past, we raised equity in order to support our liquidity needs during the pandemic, and today we're generating positive cash flow.
Yeah, free cash flow positive and positive EBITDA. Your take on the consumer going into fall and winter, Jason?
Sorry, Seema, I just lost the connection. If you could repeat the question.
I'm going to have to wrap it there. Jason, thank you for your time. We are going.
I wanted to hear that one. Oof, how is the consumer demand going to look going into this fall? You guys, the biggest takeaway from that was that very first 5-second clip where the guy says, the first 3 months of the year, we doubled. Did he say doubled? He said massively increased the second 3 months of this year from the previous 3 months, which is a great sign. He said that they've been lowering ticket prices, but that things are going, the amount of demand is increasing greatly, which is a really good sign for those of you who are holding on to any of those cruise line things. Cruise lines, hotels, all of those. I mean, this does seem like the tourist industry is back and running again. So I've got a couple things I want to show you, a couple more things and briefly comment on. Then I'll read some comments on Facebook and YouTube, and then we'll wrap this up.
They ponder, in the wake of both of those quarters, whether or not the foundational trade of cable at this point, broadband, is being questioned.
That was a very disconcerting piece for those of us who work for Comcast.
All right, now I don't know what they're talking about, but as far as other earnings coming up this week, I know that Caterpillar, but I can't think of any other big ones. I should, but I'm not on top of it. Sorry. Oh gosh, yeah. I wanted to show you this. There was a Babylon Bee article. This goes back to the anti-inflation, whatever they call it, the Inflation Reduction Act. The Babylon Bee wrote this article a couple months ago, back in May. Biden proposes $2 trillion bill to study what's causing rising inflation rates to rise. And here again, they did it. They did it. Somehow the Babylon Bee was on top of that. Okay. One last interesting little thing I wanted to show you here. There was this this thread a while ago on Reddit stocks about what are your thoughts for the rest of 2022. And it basically saying, hey, what do you guys think is going to happen with the economy and the stock market for the second half of this year? Now, none of these are, nobody has a crystal ball, you know what I mean? But people have some interesting back and forth in the comments. So I just wanted to read maybe the top 5 or 6 of them to you so that you can get some idea of, generally speaking, what the people are thinking and feeling out there. So, okay, let's see here. And again, anybody out there that wants to throw comments, go right ahead and I'll read them and we'll go back and forth after I read this. Okay. So the top comment, top voted, most liked comment was, it will all depend on energy prices going into the fall and winter. Do we have enough money left to buy stuff, or do we spend our total income heating our homes? 100%. 100%. The last 8 months, this whole Russia-Ukraine thing, really the last year and a half, with the U.S. government being so hostile towards energy and oil and gas, it just reminds you that energy literally makes everything go round. Energy is the bedrock of everything else that we do. The guy replies to that. He says, I really think we are underestimating what is happening with oil and natural gas. Persistently high prices are not going to be good for anyone. Transportation companies and plastic manufacturers are already talking about how this is impacting them. So, okay, you guys, I just got a call. I've got to end the stream early. I apologize, but email me, comment, and we'll go back and forth on the next episode. I'll see you.